It is 8:14 a.m. Pacific Daylight Time. It is the 15th day of May 2026. It's ex-dividend day for Stretch. You know, the preferred equity over there at Strategy. We are going to be talking quite a bit about strategy today, so prepare yourself because there's quite a bit that we need to discuss when it comes there. We're also going to talk a little bit about what else do I got here? Signal might leave Canada, and there is a pretty major exploit on THORChain. Again, it'll be your ending word of warning. But first, we're going to start with the Clarity Act because it's out of committee. Let's start right here with Micah Zimmerman. Bitcoin Magazine, Senate Banking Committee advances the Clarity Act. 2 Democrats break ranks in a 15-9 vote. So a pretty overwhelming majority. It's actually kind of positive news, at least for the Clarity Act itself. Now, as to what actually ends up being inside the Clarity Act is, you know, your guess is as good as mine. So, but here's Micah, and he's writing this one. The Senate Banking Committee advanced the Digital Asset Market Clarity Act on a 15-9 vote Thursday with Senators Ruben Gallego, a Democrat out of Arizona, and of course, Angela also Brooks, a Democrat out of Maryland, joining all 13 Republicans to move the sweeping crypto market structure bill to the full Senate. The Clarity Act is the Senate's bid to build a federal framework for digital asset trading, stablecoins, and intermediaries, splitting oversight between the SEC and the CFTC, and setting registration, disclosure, and compliance rules for exchanges, brokers, and custodians. It now advances alongside a related bill from the Senate Agriculture Committee, with the 2 texts expected to be merged before a floor vote. Chairman Tim Scott cast the markup as a turning point after years in which crypto firms operated in what he called a regulatory gray zone under outdated rules. He said this bill aims to protect consumers, keep innovation inside the United States, and close the doors that criminals, terrorists, and hostile regimes have tried to exploit. After months of cross-party talks that expanded the draft by more than 200 pages, Senator Cynthia Lummis, who leads the committee's digital asset panel, called the Clarity Act the hardest piece of legislation she has worked on across decades in state and federal office. She also described it as a case of first impression that tries to fit new asset types and software into some regulatory code built for earlier markets. Ranking member Elizabeth Warren from Massachusetts led the opposition, of course, arguing the committee should focus on groceries and health costs and credit card rates, not a bill written by the crypto industry for the crypto industry. Warren warned that the draft blows a hole in securities laws that has protected investors since 1929. It preempts state anti-fraud rules and allows banks to load up on volatile crypto exposure in ways she links to pre-2008 practices. She said the bill, quote, declares open season on defrauding American consumers who use crypto, and accused Republicans of advancing a framework that helps the president of the United States crypto grift. Senator Raphael Warnock, a Democrat out of Georgia, tied his no vote to ethics concern, calling President Trump's digital asset business ties just pure corruption, and faulting Republicans for refusing enforceable conflict of interest rules for all elected officials, including the president and vice president. National security concerns drove a series of Democratic amendments that Republicans rejected in 11-13 votes. Warren proposed stronger sanction tools against crypto mixers and DeFi services, citing Treasury's 2022 designation of tornado cash and warning that the bill does not isolate mixers in statute. Senator John Kennedy out of Louisiana pressed her own. Wait, her? I don't think that's right. Pressed on why new anti-money laundering sections do not already cover those services, then joined Republicans to defeat the proposal. Wow, interesting. Jack Reed, senator from Rhode Island, described how Iranian actors use stablecoins to buy drone components. Oh, God. They also import sensitive goods and collect tolls from tankers in the Strait of Hormuz. He said the Treasury still must go hat in hand to issuers such as Tether for voluntary cooperation, and sought explicit power for regulators to block foreign illicit stablecoin flows. His amendment failed along the same party line split. And then we've got Chris Van Hollen, from a Democrat from Maryland. He pointed to estimates that more than $150 billion in digital assets flowed through wallets tied to illicit activity last year, and highlighted a large North Korean exchange hack where DeFi services helped launder funds. His proposal to make it unlawful to release DeFi protocol, or a DeFi protocol, with the stated purpose of enabling money laundering, sanctions evasion, or terror financing also fell in an 11-13 vote, after Republicans argued that existing criminal statutes already reach that conduct. Republicans, led by Lummis and Senator Bernie Moreno out of Ohio, answered that Titles 2 and 3 of the bill already tie digital asset intermediaries into the Bank Secrecy Act, expand Treasury's special measures authority, and bring kiosks, brokers, and exchanges into clearer federal oversight than the House version. Ethics provisions tied to Trump's business ties to World Liberty Financial and other ventures produce some of the sharpest exchanges. Van Hollen offered an amendment to bar the president, vice president, and members of Congress from business ties to crypto firms, and to require even more disclosure, saying that it was needed because the president and members of his family had been involved in corrupt crypto ventures and various crypto scams. Moreno said the measure belonged in the Judiciary Committee because it carried criminal penalties, and defended Trump as a good man, accusing Van Hollen of declaring criminal conduct without a court record. That amendment also failed 11-13. Warren tried to force banking regulators to release confidential supervisory records related to Jeffrey Epstein, arguing that Epstein had backed early crypto investments and that exam files could reveal what banks and what supervisors knew as he moved funds through major institutions. Lummis answered that confidential supervisory material is outside a market structure bill's scope, and that amendment also failed, even after Kennedy said he would have supported it without, quote, co-conspirator language. One of the most consequential votes came on Lummis Amendment 122, a technical package negotiated with Senator Mark Warner out of Virginia that refines when a DeFi protocol counts as controlled by a small group and interacts with the bill's core safe harbor. Warren argued the amendment embeds a narrow test for which entities count as crypto intermediaries and imports a Section 604 loophole that shields decentralized services from basic anti-money laundering rules, saying, quote, "It doesn't matter if you have rules if nobody has to follow them," end quote. After a short technical fix to strike 2 lines, the committee adopted the amendment 18-6, with Warner, Cortez, Masto, and also Brooks joining Republicans. That vote marked a clear split. Warren, Reed, and Van Hollen opposed the compromise, while a crypto Democrat bloc accepted the DeFi framework as a basis to refine before floor action. The markup also turned into a test of Scott's control over the amendment list. Before the hearing, he ruled more than a dozen proposals out of order on drafting and filing grounds, including National Sheriff's Association-backed fix from Senator Catherine Cortez Masto out of Nevada on decentralized platform enforcement, and a community bank-supported stablecoin yield tweak from Reed and Senator Tina Smith. Later on, seeking a bipartisan outcome, Scott reinstated several amendments, including the Lummis 122 amendment, after Democrats such as Warner and Gallegos said committee votes on those compromises would make support easier. Warren objected that he was reviving a subset of Republican side language while leaving law enforcement and community bank proposals sidelined. Van Hollen noted that some of his own properly drafted amendments never even reached a vote, even as previously disqualified Lummis text passed 18-6. Scott replied that he and Warren had agreed to cap amendments from each side, and that within that cap, he was using discretion to serve Democrats who wanted a bipartisan result. Throughout the day, Republicans accepted targeted changes that industry and moderates backed, including Senator Mike Round's AI sandbox and Senator Dave McCormick's portfolio margin language. Both were adopted with Democratic support. They rejected every Democratic attempt to extend sanctions rules, bar bailouts, tighten DeFi liability, or write ethics rules into the bill. By the final vote, the Democratic side had split into two clear camps. Warren, Warnock, Van Hollen, Smith, and Reed built a record that presents clarity as an industry-driven framework that weakens enforcement and leaves presidential conflicts untouched. Warner helped shape key language but kept leverage for later stages. Gallego and Alsobrooks supplied the decisive Democratic votes that turned a partisan project into a 15-9 bipartisan committee win, while both signaled that support on the floor will depend on further movement on ethics and enforcement as the bill heads towards a merger with the Agricultural Committee's version and a 60-vote test before the full Senate. So, yes, it's cleared out of committee. And now there's more shit that needs to be done to this bill. But what's really come out here is now we know exactly what, like I was talking yesterday about what amendments might possibly go into the bill. Now we know what amendments were tried. And in the voting down of a lot of those amendments, we see this split in the Democratic side of the banking committee. And Warren is in the minority. And this is more interesting to me than the actual passage of the Clarity Act. If those two camps start to war with each other within the Democratic side of all of Congress, it might actually catch fire throughout the entire side of the Congress, the entire Democratic side of the Congress, because the people that are split are pretty high up. All the people on the banking committee are senior. I mean, these are senior people, man. It sounds odd, but yes, there's a pecking order or a hierarchy within the Senate. And the guys that sit on the banking committee, that's one of the most sought after committees that you can get. And we're seeing a definite split right down the middle of the Democratic side of that banking committee, which was, yes, it was already in the minority. But dude, man, that I don't know, man. That does not bode well for Democrats. However, I'm still of the opinion that the Democrats are going to end up in control of the House and maybe the Senate after the midterms, simply because nobody really knows what the hell's going on with Iran. Inflation is screaming. The bond market the bond yields are screaming, which means what? All the bonds, the face value of those bonds are starting to decrease. And a lot of banks were told they got to hold a lot of bonds to back up their balance sheets. And now those banks aren't worth as much anymore. I get the feeling we might actually start seeing some smaller bank failures, but we'll have to see. Maybe talk about that a little bit more here in a minute. But we're not done with clarity yet. Because yesterday, if you were looking at charts, you saw Bitcoin start screaming to the upside right after news broke that clarity passed. Well, not so much today because of oil prices and the bond rates. That is really the news of this morning, is that bond rates just caught on fire and now we're not doing so well. All right. So from Decrypt's Akash Giramath, we've got this one. Bitcoin shrugs off clarity gains as institution sells amid surging Treasury yields. Bitcoin is struggling to hold above $80,000. Indeed, it has lost $80,000 as institutional investors exit ETFs amid rising Treasury yields, even though the Clarity Act passed the Senate Banking Committee yesterday. The leading crypto is up 0.8% over the past 24 hours and is trading around 80,350. Yeah, not anymore. So we're going to dispense with all of that. The institutional exit comes as the 10-year Treasury yield climbed to 4.52% on Friday morning. That's its highest in 10 months. And the U.S. CPI for April rose 3.8% year over year. That's the highest in 3 years, pushing back market expectations of a Fed rate cut. Analysts link both developments to the ongoing war in the Middle East, which has kept energy prices elevated and has fed into inflation readings. Bank of America Global Research has revised its Fed rate cut expectations and believes that the Fed will hold the 3.5 to 3.75% rates for the rest of this year. However, Bank of America research analysts expect two quarter point cuts in July and September of 2027, respectively, according to Reuters. Goldman Sachs, however, expects cuts in December of 2026 and then March in 2027. So the outflows represent periodic profit taking and portfolio rebalancing rather than a panic exit, according to Tim Sun, senior researcher of Hashkey Group. Quote, funding rates remain generally moderate and the long over short ratio has not reached extremes. According to Sun, the options market points to a clear resistance zone between $82,000 and $84,000 with downside support at $77,000. I don't need to know that. And I don't need to know the rest because honestly, the rest of this is just talking about Bitcoin price action. And I don't normally do that. So what I try to do is just kind of give a frame of reference as to if you woke up and you go, what the hell happened to Bitcoin? This is why. They can't get the bond yields under control. And it's not just the U.S. 10-year. The 5-year, the 10-year, the 20-year, and the 30-year are all screaming. But it's not only that, country. Japan, their 10-year, they can't get that shit under control either. That thing, I think it topped out. What did it top out at? Let's see what I got here. Japan 10-year is chilling out at 2.72% after a 3.5% rise this morning. It hasn't been that high since, I don't even know when. Let's see if I can get a handle on that. I have to go to the month. It hasn't been that high since May of 2026. Wait, that's not, hold on. Sorry about that. I hit the wrong button on my trading view chart. It hasn't been that high since, dude, it hasn't been that high since before 2026 because my chart basically stops at, let's see, when's the last thing I got? My chart stops at February of 2006. Yeah, so this is the highest the Japanese 10-year has been in a very, 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 very long time. And it's not helping matters, right? So that's what's going on with the price of Bitcoin. But also the Dow Jones is down, S&P is down, NASDAQ is down, everything is down. Just it's a bloodbath Friday morning. Everything is bleeding. There's blood in the streets. People are now scared, terrified all across all markets because of the bond yields. And the bond yields are reacting to inflation. And inflation is reacting to the fact that they printed a fuck ton of money over the past God only knows how many years. The Strait of Hormuz and the fact that nobody knows what the hell's going on anymore at all. The news cycle is completely broken. And nobody trusts anybody in any kind of institution. It doesn't surprise me that bond yields are just completely going to the moon. But then there's always strategy. Maybe strategy and their stretch preferred equity will save us. Maybe not. Before we even look at the stretch thing, I want to talk about a little bit more about the cycle thing that I was talking about yesterday. We got a 4-year cycle on Bitcoin. And then it looked like maybe there was a news story that I read to you yesterday that talked about the fact that we are now introducing this thing called a stretch cycle, which is stretch is the name of STRC, which is that preferred stock that Michael Saylor invented, and it pays 11.5% dividend at the end of the month. All right, so I wrote a Nostr note. If you haven't seen it, I'm going to read it to you right now. STRC cycle is a thing. And today, the 15th of May, is the ex-dividend date. Once the market opens today, lots of people will sell STRC and still be able to get the STRC dividend payout at the end of the month because they own the stock by market open today. I did a little bit of research on this, and this is the fact. If you held it, if you were recorded as holding it at market open, an hour later or 5 minutes later or whatever, you can do whatever the hell you want with it. You're going to get the dividend, right? So a lot of people and when I look at the graph of stretch, which is its entire history, there is a cycle. It at pretty much it's at its low on the ex-dividend date, and it's at its high the day before the next ex-dividend date. And it cycles like that. Although the cycles are starting to get a little bit less volatile, the cycles are still there, right? So what happens when they sell? I found this little chunk of news this morning rather interesting. Well, when they sell, they will probably take that cash and walk it on over to something called the Round Hill Memory ETF, which is only 5 weeks old and is now the fastest growing ETF in history. As of right now, yeah, it knocked IBIT Bitcoin Spot ETF Trust off of its podium. Because IBIT was in the number one spot as the fastest growing ETF in history. Not anymore. Now it's the Round Hill Memory ETF. The problem with cycles within cycles, or STRC operating within the Bitcoin 4-year cycle, is that the harmonies they create together sometimes converge to create pleasant tones, sometimes they create dissonance, but sometimes the waves are perfectly out of phase and cancel each other out. I should also add that sometimes they're perfectly in phase and amplify each other. This is the way that waveforms interact with each other. I'm just want to make that clear. This is physics, right? But yeah, the Round Hill Memory ETF, and if you want to know what it is, it's about computer memory. Essentially, it's tracking chip makers like Micron, and Micron is one of the people that makes computer memory. But they also track like 3 other memory makers, like the people that actually build the chips that are RAM, right? And in fact, if you want to go look for the ticker symbol of Round Hill Memory ETF, it's DRAM or DRAM, which is what all these people are making for the AI industry. And so what does this tell me? AI is, I don't know, man. It feels really bubbly. Now, you're going to ask me, when is the bubble going to pop? Shit, dude, I don't know. And my gut feeling is not right now. I get the feeling there's too many build contracts for, building these things, these huge, massive data centers. There's too many deals are still actually being inked at this point for me to feel that it's safe to say the bubble's about to pop. I don't think it's about to pop. I think it's on an inflation thing. But that's what this ETF now becoming, the fastest growing ETF in history in 5 weeks, because it's tracking just computer memory. And companies behind the manufacturers behind computer memory. And the only reason computer memory is on fire right now is because of high performance compute and artificial intelligence. That's it. That's all. That's it. They don't track anything else. They're not tracking CPUs or GPUs. They're just concerned about those companies that make computer memory. It's very, very niche. It's very, very specific. And that's one of the reasons why I have this feeling that this is indeed a bubble, and at one point or another, it is probably going to pop. It doesn't mean AI goes away. It'll be like the internet bubble, right? We all use the internet. I'm talking to you on the internet right now. It wasn't a destructive bubble because we're all still here, but there will be a massive deflation, right? And then AI will still be here. The smaller companies will all be burned to the ground, and only shit like Anthropic and OpenAI will still be around, and a couple of other companies. So that's sort of what that shit's telling me. But back to Stretch. Strategy's STRC hits a record $1.5 billion in trading volume. This is out of Cointelegraph, written by Braden Lindria. Strategy's perpetual preferred stock, STRC, the company's primary vehicle for funding its Bitcoin purchases in 2026, hit a new daily trading volume record of $1.5 billion on Thursday. Quote, all-time high volume, $1.53 billion of liquidity, Chairman Michael Saylor said, referring to Strategy's variable rate Series A perpetual Stretch preferred stock. Stretch offers investors an 11.5% dividend without requiring the company to dilute common shares. According to the STRC.live tracker, the company could, in theory, raise an estimated $735.4 million from Thursday's performance to purchase 9,066 Bitcoin. There's no guarantee that they will, but they could. Strategy has now purchased 56,770 Bitcoin since April and 101,147 Bitcoin since March, accelerating its pace after a slower than usual February. And honestly, that's all we really need to know, is that Stretch is, as of yesterday, was also still screaming. People were still buying a shit ton of STRC to get that 11.5% dividend. And like clockwork, the Stretch cycle reset this morning. When the market opened, Stretch went from right at like $100 or whatever down to like, well, actually it's like, I think it's like actually like $10. So let me look. I'll be able to tell. I can tell you real quick. Let's see. STRC. There we go. So what did it do? It went from $100. Let's see. I'm going to get it right there on the day. So this is on the end of the 14th, yesterday, 12:30 p.m. my time. The low, or it closed at $99.99. This morning, it opened at $99.15. Now, that doesn't sound like a lot of movement because we're talking about pennies, but when you've got hundreds of thousands or millions of these contracts, that adds up. So, and it's done exactly what it did last cycle. The cycle before, on the Tuesday, the 14th of April, it closed at $100 exactly. And Wednesday morning, it opened at $99.41. So this is that cycle that I'm talking about. So it's a month-long cycle. Every month it does this, right? You got to be an owner of record by the 15th, and then you basically sell all your shit, go do something else with your money. You get the dividend on the 30th, and then you start building up your position and Stretch again. And then the site is just rinse and repeat. All you got to do is hold it or have bought it by the 15th, so you can be an owner of record on X dividend day, and you get your 11.5% dividend at the end of the month. But there's something new on the block, and we'll get to that after we run the numbers. CNBC Futures and Commodities. Trump has lost patience with Iran, and it shows because Brent North Sea is up almost 3% to $108.88. West Texas Intermediate up 3.5 to 104.67. Natural gas, not a hedge today. It's up 2% to just under $3 a thousand. And gasoline is up 2 1/3 to $3.69. Wow, $3.68. Holy smokes. What happened yesterday? Oh, well, whatever. Murban crude is up 2.6% to $107.44 a barrel. Metals, as you might imagine, considering that they're quote-unquote a risk asset, are all down across the board. Palladium is down 2 1/4. Gold is down almost 3 points to 45.49 and 5 dimes. Platinum is down almost 5%. Silver is down damn near 10%. I mean 9.95. We're really close to double-digit loss on silver. $76.86 an ounce. Copper, even though it's been screaming in price lately, it is also down by almost 5%. $6.28 per pound, I think is how they measure that one. Ag is all down except for lumber, of course. It's up 1.5%. Biggest loser today is cotton, 4.7% to the downside. Live cattle up 0.5%, lean hogs down 1 1/4, and feeder cattle are up 0.8%. The S&P is down almost a point. The NASDAQ is down by a little over a point. The Dow is down by almost a point, and the S&P Mini is getting it between the legs, 1.61 in the red. And then there's Bitcoin that basically is saying, I'm completely connected to legacy markets now, and I'm going to act accordingly. $79,070 brings us back to a $1.58 trillion market cap. We can still get, though, 17.4 ounces of shiny metal rocks with our one Bitcoin, of which there are 29,566.78 of. Average fees per block are normal. And there are about 45 blocks carrying 118,000 unconfirmed transactions waiting to clear at high priority rates of 5 sats per VByte. Lows will get you in at 2. And hash rate is crossed back into zettahash territory, although it probably won't last, so just be prepared. It's at exactly 1 zettahash as of a 1 week average anyway. So it is a 1 week average. It's not exactly a number of what's going on right now, but hey, the best I can do with what I got. From Clarity Today, yesterday's episode of Bitcoin and Permanerd with 210 sats says, listen to this episode and then go buy some amazing cocoa. I've had it and it is. It's from Bitcoin Beans, and then come back here and thank me. Nick Dose with 213 sats says, cheers. Nostr Gang with a short row of sticks says, boost. And Cycros with 100 sats says, you can sell a stock on the date of record and get the dividend. Sales settle the next day, so you hold through the end of that date of record. Okay, that makes sense, considering what the research that I did this morning. Thank you, Cycros. I appreciate the addendum to that, or at least the confirmation of what I found out this morning. If you guys want to support the show, please boost and boost heavily, or you can stream Satoshis. You just use any Podcasting 2.0 app. Most of them work. I have had a couple of people tell me that a couple of ones, they were having problems with it, so they had to go and boost me some other way. But boosting the show really helps. And a 5-star review on Apple Podcasts and Spotify Podcasts also helps. I've tried to make it easy by supplying you with the URLs in the show notes to Apple, Spotify, YouTube, and I can't remember the other one offhand. Oh, God. I almost had it. Anyway, you just click that. It goes right to my show. And if you're logged into Spotify or you're logged into Apple and you do that, It should take you right to my show and give you the chance to give me a 5-star review. You don't have to search for it because I've given you the URLs directly to the show. I'm trying to make it as easy as humanly possible for you guys to support the Bitcoin and podcast. That's the weather report. Welcome to part 2 of the news that you can use. Strategy. Yeah, I know. I told you it was going to be strategy heavy today, but there's a reason for that. In this one is because Strategy is going to retire $1.5 billion in convertible notes at a discount, may sell Bitcoin to fund buyback. Let's not everybody calm down. Naga Avan Namoyo is going to write this one for the block. Strategy plans to repurchase $1.5 billion worth of debt at a discount and listed Bitcoin sales as a potential funding source. The company has entered into privately negotiated transactions with zero coupon convertible note holders on May the 14th, with settlement expected on or about May the 19th, according to an 8-K filed with the SEC. In the deal, Strategy would pay approximately $1.38 billion total, retiring the debt at roughly 92 cents on the dollar. The notes were originally due in 2029. The final cash repurchase price is subject to adjustment based on the volume-weighted average price of Strategy's Class A common stock during an agreed measurement period, meaning the actual outlay could shift before closing. Strategy cited 3 potential funding sources for the buyback: available cash reserves, proceeds from its at-the-market equity offering programs like Stretch, and proceeds from the sale of Bitcoin. The inclusion of a Bitcoin sale as a funding mechanism carries weight. Strategy's executive chairman Saylor clarified earlier this month that the firm operates as a net accumulator of Bitcoin, as he tempered the news that Strategy might sell some of its holdings to meet obligations. In particular, Saylor has separately signaled that the company expects to sell some BTC to fund dividends on its high-yield STRC perpetual preferred stock. That's that Stretch shit again, which it issued to raise capital to buy Bitcoin. Though Strategy would now not only be buying Bitcoin, the firm intends to maintain buying pressure by eventually replacing each coin sold with 10 to 20 more Bitcoin, Saylor said. Strategy intends to cancel the repurchased notes following settlement. Approximately $1.5 billion in 2029 notes will remain outstanding after that particular cancellation, implying the company held roughly $3 billion in instruments before the deal. Strategy holds 818,869 BTC worth more than $66 billion at current prices, the largest corporate BTC stockpile per the block's Treasury tracker. And then they talk about how they've added certain amounts of Bitcoin, but we really don't need that. It's just that this is coming. They entered negotiations yesterday. He's going to repurchase the debt at a discount, which I guess is good for him because he's going to be able to retire $1.5 billion of debt, and he's only going to cost him $1.38 billion. But since the fact that since the word Bitcoin is on the table, and this got released today, along with bond prices screaming, yeah, it's a double whammy. It's kind of a double whammy on Bitcoin. Although I got to tell you, it's the bond prices are causing the real problem here. That's like 80% of the driver. But this is on the table. Just be aware. Remember how I was telling you that there was a new kid on the block when it comes to this preferred perpetual shit backed by Bitcoin like Stretch? Well, now we've got Strive. Bitcoin firm, and its name is Strive, has unveiled a daily dividend payment for SATA preferred shares. Andre Bagonsky is writing this one for Decrypt. Now, keep the context in mind. Stretch, which is Strategy's preferred perpetual, or, well, preferred equity, whatever you want to call it. It pays out dividends once a month at the end of the month. This one pays out dividends every single day. That's the context. Strive's preferred stock will soon become the first U.S. listed security ever to provide investors with daily cash dividends, the Bitcoin buying firm declared on Thursday. In a statement, CEO Matt Cole described the shift as a 0-to-1 innovation affecting the company's variable rate Series A perpetual preferred stock named SATA, S-A-T-A, starting June the 16th. SATA, which debuted on the NASDAQ in November, currently carries a stated annual dividend rate of 13%. Remember, Stretch only pays 11.5%. This one pays 13%. Anyway, while that rate is expected to remain unchanged as Strive transitions from a monthly to daily payout format, the more frequent compounding is projected to boost SATA's effective annual yield to 13.88%, according to an investor presentation. The transition underscores continued experimentation among Bitcoin buying firms that have embedded dividend-paying products as a way to grow their stockpiles. Strive modeled SATA on Strategy's STRC, which debuted in July, currently paying out at 11.5% monthly. Strive telegraphed SATA's shift alongside first quarter earnings. The company reported a net loss of $265.9 million in the 3-month period ending March 31st, attributing the performance to a $295.8 million decline in the value of its Bitcoin holdings. Holding 15,009 Bitcoin on its balance sheet, Strive is the 9th largest corporate holder of Bitcoin, according to Bitcoin Treasuries, with Bitcoin changing hands at around 81,500 as of this writing. Tells you how old this is. The sum was valued around $1.2 billion. Strive unveiled its first acquisition in September. Strive shares jumped more than 5% to a recent price high of $17.60, according to Yahoo Finance, after touching $18.22 earlier on Thursday. Since the company announced its first Bitcoin purchase just over 8 months ago, shares have plunged 86% from $130, facing volatility as the digital asset has fallen about 35% from all-time highs. Although Strive had issued long-term notes to purchase more Bitcoin than it could otherwise, the firm said on Thursday that it had repurchased them, eliminating that outstanding debt. In the presentation, Strive said that SATA had become its only form of Bitcoin-backed, quote, amplification. Last month, Strategy announced a proposed shareholder vote to double the dividend payment frequency on STRC to a semi-monthly schedule, a move aimed at reducing its own volatility. So far this year, Strategy has raised billions of dollars via the dividend-paying product. Although STRC has seen adoption among Bitcoin buying peers, Strategy's leadership has said the dividend-paying product has also found adoption among individual investors. Despite being marketed as digital credit, STRC is an unsecured asset, lacking the legal protection, security, interests, and Bitcoin-backed collateral requirements of traditional debt. Strive noted on Thursday it owns $50.5 million worth of STRC, in addition to $87.6 million worth of cash and cash equivalents. Cole said that the company's performance in a post to X, and Strategy co-founder and executive chairman Michael Saylor chimed in, calling it impressive. Yeah, so Strive basically, their CEO, Cole or whatever, basically put out to X that they had, $50.5 million worth of stretch and an additional $87.6 million worth of cash. And when Michael Saylor said impressive, I have to go back to this paragraph. I'm not going to read it again, but this paragraph that said that now Stretch, for Michael Saylor, okay, because there's Strive and then there's Stretch and then there's Strategy, and it all gets very confusing. But we've been talking about Strive and their daily dividend payout that they want to start doing on June the 16th. And then I almost missed it myself as I was reading. Strategy wants to reevaluate their dividend on stretch to, instead of paying just once a month, paying twice a month. So that's going to interrupt the cycle that is, if you look at the stretch chart, all the data, you can see how the cycle is starting to settle down. If Michael Saylor does this, takes it from a monthly, one time a month dividend payout to paying out twice a month, that's going to re-inject noise into the system. And I think that the fact that that cycle is starting to settle down in volatility is why he wants to do it. I don't think it's because he wants to compete with Strive. I think what it is that, it's getting a little too predictable. A little too predictable for what I think his tastes might be. So what best way to shake up a calm pool of water than to throw a gigantic rock into the middle of it? And that's what this would actually do. So be aware that, keep your eye on stretch and whether or not Michael Saylor decides to take it to a semi-monthly dividend. Let's leave all that bullshit behind, shall we? We got a fresh new pile straight over here. Signal hints that it could leave Canada over lawful access bill. Cointelegraph, Brian Quarmby is writing this one. Privacy messaging app Signal has said it may exit Canada if forced to comply with the country's proposed lawful access bill, which would require companies to build technical surveillance capabilities that some argue would threaten end-to-end encryption. In an interview with Canadian news outlet The Globe and Mail on Thursday, Signal's Vice President of Strategy and Global Affairs, Ubhav Tiwari, cannot pronounce these names, argued that the bill could threaten encryption and leave private messaging services vulnerable to potential cyber attacks. Bill C-22 is part of a regulatory package introduced in March. It would require electronic service providers to build surveillance capabilities and retain certain user metadata for up to a year as part of a broader push to help law enforcement investigate crimes such as terrorism and child exploitation. Some have criticized the bill because of its implications for user privacy, echoing concerns of the EU's controversial chat control proposal, which proposed threats to encryption by pushing for client-side scanning of private messages. In an X post on Thursday, Canadian Conservative Party Member of Parliament Jacob Mantle claimed that every member of Parliament in the country uses Signal primarily for its safety and privacy features, arguing that the bill would contradict that and allow the government to read everyone's messages. Tiwari said that the firm would rather pull out of the country than comply with the law and compromise on the privacy promises that it made to users. Quote, Bill C-22 could potentially allow hackers to exploit these very vulnerabilities engineered into electronic systems, with private messaging services serving as an ideal target for foreign adversaries. The bill is not yet law. It still has to pass through parliamentary review and receive royal assent before taking effect. Tech giants such as Meta have welcomed certain aspects of the bill, noting that it would provide law enforcement with an effective legal framework to obtain critical evidence and protect the public safety. Yeah. It's good news that the chief, or that Signal themselves, is telling Canada, we'll just pull out. Now, they're not headquartered there. Signal is not headquartered in Canada, but they can basically just shut down the servers and just pull their shit off. And I'm sure they're renting them. They probably don't own them. So they'll just terminate the lease agreement and say force majeure so that they don't have to pay the rest of it. Because it's kind of an act of God, kind of. I mean, they may not be able to get away with that, but who knows? But Canadians can basically kiss Signal goodbye. And it's just another example of a government completely out of control. And Canada's government is not the only one that's completely out of control. However, Signal isn't the only company feeling that pressure. VPN service provider Windscribe said that it would also follow Signal out of Canada arguing that the law poses a threat to user privacy. Quote, "We will not be far behind if C22 passes. In its current state, VPNs would almost certainly require us to log identifying user data," Windscribe said. Quote, "Signal isn't headquartered in Canada, so they can just shut off Canadian servers. But our headquarters is in Canada. We pay an ungodly amount of taxes to this corrupt government, and in return, they want to destroy the entire essence of our service to basically spy on its own citizens," Windscribe said. Yes, came straight out and said it. Corrupt government. Corrupt government. This is Windscribe making a statement in public. They are a Canadian company. They are headquartered in Canada. They do have all their servers in Canada, and they'll come to the United States. I almost guarantee they'll probably find their ass down in Texas like everybody else is. Freaking amazing, man. Absolutely amazing. And now for your final one of the day and one of the week. Another warning, get your shit out of DeFi. THORChain halts trading after $10 million cross-chain exploit. Rune token drops 12%. Shara Malwa writing for CoinDesk. Decentralized cross-chain liquidity protocol THORChain was exploited for $10.8 million Friday, with the attack affecting deployments across 4 different blockchains. In response, the protocol paused all trading and signing operations, according to ZachXBT on Telegram. The attackers' wallets, identified across Bitcoin, Ethereum, and BSC, currently hold 3,443 ETH, worth $7.7 million. There's $2.97 million of Bitcoin and $66,000 worth of BNB per Arkham Intelligence. THORChain's Mimir governance module flipped trading halt and signing halt parameters to active, with the node pause running for approximately 12 hours and 42 minutes. Wow, it's a long time to shut down your chain. Rune, which is the protocol's native token, dropped 12% on the news. THORChain operates as a decentralized cross-chain liquidity network, letting users swap native assets across different blockchains. So another one. And they don't know what the hell happened, not yet. I'm sure it's probably going to be somebody with Claude running in the background, but I'm sure at one point or another, somebody will say something as to exactly what the hell happened. It doesn't matter, though. DeFi's a mess. It's always been a mess. We're now starting to see just how tangled of a mess that shit is. And if you have any of your money still on DeFi and you haven't listened to me, please get all of your money off DeFi and go buy Bitcoin. It's apparently on a fire sale right now. What is the price? Let me go ahead and find out for you. We're chilling out at $79,181. And the high last night that it got to after we passed the after the Clarity Act passed the banking committee, our high was 82,047. So we've lost almost 3,000? Yeah. Something like that. It's always fun in Bitcoin, isn't it? Y'all have a great weekend. I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.